Hello, and welcome to the Financial Markets Insights podcast. Today, I'm delighted to be joined by Jeff Mezger of TNS and Arnaud Derasse of Exegy. And we're going to be talking about these shifting sands of market data and trading infrastructure, where we've come from, and what are now the imperatives for capital markets participants in terms of how they consume and use and manage both market data and trading technologies. So first of all, let's just ask you to introduce yourselves, starting perhaps with you, Jeff. If you could tell us a little bit about yourself and your background.
Thank you, Tina. Very happy to be here. My name is Jeff Mezger. I'm Vice President of Product Management for TNS Financial Markets. I've been in the trading industry for over 20 years now, serving in multiple roles. I started out as a software developer and then moved over to transaction network services, where we're provider of trading infrastructure and market data services. So in my career, I've gotten to see all parts of the trading infrastructure stack. I've worked on software, now, more focused on infrastructure, but at all times over my career, I've been dealing with exchanges and market data, whether it's writing feed handlers or figuring out how to transport huge volumes of market data around the world. So I'm happy to be here.
Thank you. And Arnaud?
Yes. Hello, Tina. Hello, Jeff. I'm so very happy to be here with you today. So I'm currently the CTO, Chief Technical Officer at Exegy. I also spent quite some time in the financial services market data business. I actually founded a company 15 years ago. They were specialized in building FPGA accelerated solution for finance, which is now part of Exegy. So I've been also dealing with feed handlers. I started myself as a developer as well, but on the FPGA side, I was actually writing FPGA code in my career. And then I led my company into building global scale, providing FPGA services.
So let's kick off with talking about, I think, where we've come from, the way financial firms service and solve market data and trading infrastructure needs. So evidently it's changed and technology has clearly been a big driver of that. But before we look at what is and what's coming, should we talk a little bit about how we've got to where we are in terms of this historical approach of firms, what they were looking for, how they, say, received and consumed information previously, and what's changed and changing?
Yeah, it depends on how far back we want to go.
Well, I was going to say, I'm obviously the longest term veteran. I think you come second, Jeff. I'm probably 30 years in. I can only say that I was in financial markets before technology was invented. So one of the first big things I did in FX was electronic trading for spot FX. And at that time, everyone said, this won't catch on. Automated trading, matching engines and selling data, ticker data, etc. So absolutely, let's say 20 years for the sake of arguments.
I think there were two broad trends. One is, if you go back far enough, you had this paradigm where on the buy side, their technology was mandated on them or provided to them from their brokers. They had a relationship with a broker. That broker gave them the access to the exchanges. They used the broker's software. That's how things worked. Over time, that shifted, right? There were cost pressures at the banks to take costs out of their business and, maybe stop providing the infrastructure. You had buy-side firms move to more of a multi-broker deployment where they were executing through multiple brokers. So you can't have your infrastructure tied to any one broker. So with the advent of that, when they stopped receiving their infrastructure and their software from the broker, now they were left to their own devices. They had to figure out how to do it themselves. And that presented a number of challenges, right? One is geographic reach. Depending on the trading strategy they're employing, they may need access every market and every exchange and every data set around the world. If you're a nascent firm trying to build infrastructure for the first time, that's hard. That's a lot of new relationships you have to establish with different vendors around the world. Each market you operate in, you have to find a data center provider, a telco provider, navigate cultural and language issues, and it's expensive. Right? It's a lot of money in the ground around the world. So you had one aspect where they were trying to navigate and figure this out, build their own software. Maybe that's not something they had done before, but now they're trying to do that. And that kind of coincided with the increased importance on latency on these trading strategies, right? Trading strategies were increasingly predicated on being the fastest. And you had firms investing a lot of money into how can we shave off microseconds? How can we shave off nanoseconds? Again, very expensive to figure that out. And it requires expertise, especially with the newer technologies that we'll talk about. It's very complicated. So building that expertise, building all this out is time consuming and expensive. And, I think increasingly firms started seeing, all right, this is not our core competency, right? We're a trading firm. We're an investment firm. We're trying to turn ourselves into a technology firm. Maybe that's not where we should be focusing our energy and resources. Let's try to find somebody who that's what they do, they're good at. We'll stick to our knitting, which is our trading business, and work with other firms to take care of the technology part.
You make a good point. This is probably timely for you, Arnaud. I mean, to me, it's all about communications and connectivity, isn't it? That's the two challenges.
It's a perfect segue into what Exegy do, and also what was the inception of Exegy and all the companies that are now part of Exegy. So Exegy is a technology company. We are a leader into providing low latency market data and advanced trading systems and future-proof technology. All these companies that form Exegy today started around 15, 20 years ago, and with this idea of there was a need in this industry to access the market faster at low latency. So this is one of the trends, one of the drivers that has been pushing financial institutions to create their own technology and have access directly to the markets. It's this idea of we need a better understanding of how we access the market, how fast the market data is coming to us, and how fast our orders are being executed back to the market. And this was a big shift in the way the trading firms were actually placing orders in the market, because suddenly they had to have a much better control on the technology stack, understand it. And this is exactly what you say, Jeff. Like, some of them decided to actually build an engineering organization within their own organizations. Some of them decided that they needed experts and engineering firms, technology firms to help them achieve this. And specifically, what has changed is that they need to connect to 1, 2, 3 markets, but then they need to reach some scale. And why some of them started to say, hey, we're going to try this, we're going to do 1 or 2 markets. At some point, they realize, oh God, if we have to connect to all of the markets, we're going to need help. We're going to need a technology partner. And what is changing is the fact that in the past 15 years up to today, you had this changing of, we're going to do it ourselves because we need to understand how it works. We need to understand the technology. We need to control the latency, into a market today where you have established partners that can provide you a very good technology that has a clear understanding of the latency of the trading, and both TNS and Exegy are part of these partners today.
Isn't the value of that as well? Because by definition, you can provide the scale, because if one of your customers wants to connect to X number of markets, then every other client you have now has that route. Is there an element of the rising tide lifts all ships? So the scale benefit of coming through a technology provider or a service provider is everyone benefits from all the changes, enhancements, upgrades to your functionality, upgrades to the expansion of your network connectivity. That's then available to everybody who wants to access it, rather than the reverse being, if you're doing it yourself, each time you're engaging, as you say, in a new relationship, each time you've got to go through the same contractual hassle. Is there also an element that, the whole world of market data has changed, because exchanges traditionally didn't want everybody to be able to access their data for the obvious reasons. They wanted you to be their customer. They didn't want co-opetition. And that's presumably also tied in as well from a buyer demand who now wants to have the most efficient way of accessing trading data, both to inform trading decisions and post-trade to make sure that you've got an efficient process.
I think from the exchange perspective, there's kind of been 2 trends, right? One is distributing and selling market data is now a huge part of their business, right? It's a profit center. They're making good money in this business. So I think they're now happy to work with firms such as Exegy and TNS that'll have us distribute and sell their data, right? Everybody benefits from that respect. But it also means it's now something that they invest in, upgrading their infrastructure, improving their matching engines. The knock-on effect of that has been the increase in the market data rates and the bandwidth required and the number of messages, right? It's always been growing, but now, it seems like it's been accelerating, and we're reaching some tipping points, some laws of physics issues. Not to get too deep into network infrastructure, but 40 gigabits per second is a magic number, right? A lot of networks were built and designed to handle 40 gigabits per second. Last year, for the first time, you had the Opera feed, the options feed in the US, eclipse that 40 gigabit number. So now there's a big project, a lot of money in the ground to kind of retrofit your infrastructure to go from 40 gigabits per second to 100 gigabits per second. Last fall, you saw the same thing happen with NASDAQ, where now if you take all the NASDAQ markets, no longer available over a single pair of 40 gigabit connections. So, you're running into these challenges, which also, it speaks to the cost aspect of things, right? It's expensive to deal with and handle these upgrades and upgrade your infrastructure. It's hard. You're starting to get into some different engineering challenges. It's also, and I'd be curious to get Arnaud's thoughts on this, right? From a software perspective, there's similar challenges. I mentioned I was a bad developer, but I wrote feed handler software. Keeping up with message rates, even at the lower message rates, was hard. Now, if you're talking about consuming 40 gig plus feeds, that becomes real challenging from, a software engineering perspective too, which makes me glad I don't do that anymore because I don't think I'd be capable of it.
Arnaud, would you like to add to that?
Yeah, exactly. And we're glad, Jeff, you don't want to do this anymore because we like doing this on our side. But definitely, I mean, what has changed is that exchanges, they have been more and more selling directly to the participants. I mean, again, I think 20 years ago, I mean, most people would go to a Thomson Reuters or get their data from Bloomberg, or they would just need the data, right? It was about, oh, I need the data, but I'm not going to too much care about the technical aspects of how is this data provided to me. And what has really changed is this is like the direct relationship between the exchange and the participants, and this idea of technical control, which creates all these very, very big technical challenge, which Jeff just discussed, when you have to increase the network size to receive more message and more bandwidth. And also there's this massive challenge, which is if you have a direct relationship with each of the exchange, you have to deal on the software side with managing what we call EDCs. It means exchange-driven changes, which means the exchange tells you, hey, we are changing something, you're going to need to adapt. And we don't have a choice, right? We have to do it. There's a date, it's set in stone, and they are making a change in the way they provide this information to you. And you have to change your system on your side to deal with that change so you can keep going. And so if you take this at scale, that becomes a very, very difficult problem to solve. Because again, before you would just ask for someone to give you the data, they would take care of all of this, they would give you the data, and they would deal with all of it. Now you want to have the control on this because you want to understand the latency, the performance, you want to be competitive, but suddenly you have to deal with all of this. You have to deal with writing the software, updating the network, getting the connectivity, and all these things that is adding a lot to a firm that is potentially a trading firm or an asset management firm.
Well, the key to this and the message here is it's continually evolving. It never stands still. There's never any point within a firm that you can say, oh, we're done. We've built the perfect infrastructure. We've got the perfect platform. Game over. You can all go out now, because actually every minute there's more markets, there's new exchanges, there's new things to connect to, there's new communication technologies, there's new ways of communing with people. And this is, it's a challenge even for a huge firm to keep ahead and abreast of all of those changes and to be able to adapt and respond quickly enough, which again is the merit, which is a nice segue into what we're going to be talking about shortly. Why would you do it yourself when you don't have to? Surely the elegant solution is to come to a provider that says, I can connect you anywhere you need to be connected and give you ultra low latency connectivity in the places you need to be. Because if you're, again, back to your point as a service provider, if you're doing it for one, then that benefits anybody else who wants to connect because you're making the connection once. So one to many thing, isn't it? And your client on your side is connecting to you to get the benefit of that connectivity. So one of the things I think we'd like to talk about, we talked about latency and costs, obviously, and the sheer headache of trying to keep up with all of this. Is it your experience in the modern world that firms are looking increasingly to go to one place? They don't want to have to deal with a telco provider and a network provider, and they'd rather go to or go through companies like yours that can say, we can do all this for you. We can map what you need and then come back to you and show you how we're going to connect you. So is there I do hate the phrase one-stop shop. Is that increasingly an imperative for firms as well? We don't want to do it ourselves. So what is the most efficient way for us to do this? Is it partnering with an Exegy and or a TNS?
Yeah, I mean, absolutely. That's what we're seeing. Yeah, it's a trend that seems to be accelerating. There's a number of things driving it. You mentioned the rising tide lifting all ships, and it's the economies of scale, right? It's not just, Arnaud mentioned the exchange-driven changes. It's not just that these protocols and these exchanges are always changing things. It's so that there's all these data feeds are different APIs or different protocols. Just understanding and developing one of them is tough, but doing that at scale, 10 exchanges, 100 exchanges, that's a lot of knowledge you have to gain. And especially one of the things we're seeing lately is I think there's increased focus we're seeing amongst firms looking at frontier markets, whether it's through Latin America or in the Asia Pacific region, right? And once you start doing that, now, they're encountering technologies they've never dealt with before. You're going down this path of, I mentioned earlier, having to find new vendors and source all that. It's much more difficult in some of these markets that they're moving into. So the benefits come down to economies of scale is one, right? We talked about from a software development perspective, right to it. Once any customer can benefit from that, right? From the infrastructure provider perspective where I sit, a good amount of this data is multicast market data, right? Which means, we can mutualize the costs associated with delivering that. Instead of every firm going to get their own circuit, their own telecommunication circuit to exchange. We can do it once and, provide that to multiple firms, realize an economy of scale there. So there's an aspect of simplifying things with a one-stop shop just from a cost perspective and enjoying those economies of scale. But there's cost when it comes to just supporting and maintaining it as well. Again, having to deal with multiple vendors. And that's why, I think this partnership with Exegy has been very successful, is now we're taking that through the full stack. Since we have a close partnership, we can together manage all the way from your market data distribution layer and your market data software to the infrastructure and the exchange handoff, right? So it's the one throat to choke concept where now, you can deal with a single vendor relationship and kind of enjoy the support and the delivery of that stuff around the world.
Oh, no, that's an interesting point. So even, and again, I know it's a model used by you guys and others, they come to you, Jeff, in this case, say they engage with TNS, but you're already collaborating with Exegy or in partnerships with all these other data and technology infrastructure providers. So the same premise applies. The shop front is, effectively you, the contracts with you on the master agreement, but the rest of it behind the curtain means that they have this absolute smorgasbord of accessibility that to create themselves would be virtually impossible or very expensive.
Yeah, and I mean, just to respond to this, I mean, we see also the fact that in the past, people were having to deal with directly the exchange, the data centers, the telco companies, the software vendors, and they wanted to do this themselves. There was this idea of if I do it myself, I will have that control and then we get that edge. I think we're getting matured on this idea that, okay, we need this, but we don't want to do this ourselves, which is kind of the new thing. It is this idea of, actually, I needed to do this myself 10 years ago because that was the only way to get an edge to my competition. But now you have these very good companies that provide this at the right level of quality that I need, at a level of quality that is at least equivalent or better than what I could do myself. So this shift, is this idea of we want a partner that can do this that we used to do in-house or that we need to do, but we don't want to do this ourselves. So that's a big shift. And going to one-stop shop, or in this case with TNS and Exegy, it's a two-stop shop, but because we are partners, you can actually, as you say, you can have a master agreement with one and we package and bundle the whole. But this is the idea that if you want to control your latency, if you want to scale to foreign markets, I mean, that's probably the best way to do it today.
Another aspect to it is there's a time to market aspect, and there's also the kind of the speculative nature of these new markets that firms are entering. I mentioned is we're getting into some of the frontier markets. Firms are looking at that to uncover new opportunities, but you don't necessarily know that your trading strategy is going to work down there, or that it's going to be financially feasible for you to operate in that country, right? So something we definitely see people coming to us, and Arnaud touched on it earlier, is if you want to, we'll say, dabble in a new market, if it's a market where, TNS already has the infrastructure, Exegy already is able to provide the software for it, you need to invest less to start up in that market. You don't have to learn the protocols. You don't have to, build out a data center. You can kind of try to do a land and expand type model, which also shrinks the time to market, how long it takes to get your infrastructure and your strategies set up. A lot of opportunities are fleeting, and if you have to spend months and months building all this stuff out, you may not be able to capitalize on those opportunities, right?
Yeah. Or you miss the opportunity, right? Because it takes you so long to agree to do it, then to do it, and to see if what you've done is correct, that by that time the ship sailed. Another sailing analogy. I don't know why they're all about ships today.
It's very nautical.
One of the things that we could talk about is, are there any specific use cases? So we've talked generically, and I'd really like the argument that it gives you a nimble and elegant way to actually try out new strategies. Let's look at these new markets. Or, it's going to be a real headache to try and do this ourselves, but actually you can go in, it doesn't work, or it's not what you wanted. Your opportunity has been maximized in a short space of time, and your cost or investment's been minimized because you've tried it didn't work, and you've come back out. Are there other specific use cases that would highlight what people are really focused on now? So things like consolidated feeds and feeding, the ticker plant challenge is one of the other things you can help. One of the challenges you can resolve around that as well by being not outsourced. We're very clear, you're not outsourced to a partner to companies, by saying, we've got the pain, we've done it, so you don't have to. Basically, you just get the benefit of what we've already built.
Yeah, one aspect of that I'd be curious to get Arnaud's thoughts on, right, is that financial firms, trading firms are not one monolithic thing, right? They're all going to have different needs, different wants, different requirements. Some will trade every exchange in the world. Some will cherry pick 2 or 3 and just focus on those. everybody's land somewhere differently on the latency spectrum. Some of their strategies are predicated on every nanosecond matters. Latency is still important. There's nobody that'll tell you latency is not important, but they maybe are willing to see some latency if it's a lower cost, if they're, trying something new and they want to dabble in it before committing a lot of money, or maybe they're looking for more flexible API, something that'll let them get up to speed faster. So you have the spectrum of needs, latency, cost, flexibility, stuff like that. So it's about being able to have kind of a differentiated offering where you pull off the trick of having something that can cater to all those groups. You got to build a platform that always can cater to the people where latency is ultra important. You can't sacrifice on that, but find a way to also have offerings that benefit other firms along that spectrum. And I think this is where, when you start looking at what Exegy does, I know I personally would be curious to hear more about this. I know you guys have a fairly differentiated product offering.
Definitely, Jeff. And exactly, it is very important that, we have multiple use case and specifically around latency. Even if everything we do is going to be considered low latency, or we have control on the latency, you have a consolidated feed that is basically going to be the highest latency. Then you're going to have a sort of ticker plant processing system that is going to be usually around 5 microseconds of latency processing the data. And then you have the FPGA solutions, which is my background, where you're sub 1 microsecond and you can have very, very, very fast system processing market data and executing orders in less than 500 nanoseconds if we are talking about the tip to trade. So we see all these use cases from our customers, which is always like we need the control on the performance. And we have different type of algorithm, different type of trading, different type of leads where we're going to need different type of latency and also different type of scale. So definitely all of these use cases can be addressed by a single partner, which is very good for the customers because they have the expertise, they have, in a way, the consultancy from us to say, oh, okay, you're doing this. This is probably this kind of solution that you need. This is the latency profile to achieve these kind of objectives. So it helps a lot to have a very differentiated offer in terms of the technology we can provide, depending on the use case, which we discussed. It can be a scaling use case. Okay, you need to address these foreign markets, or it could be a very much more latency play use case. Okay, I want to take my US equities trading to the lowest possible latency. And we address all of these use cases. One other use case I'm very happy to discuss, and maybe Jeff, you have something to add on this, is we've seen increasingly our partnering firms and customers and prospects asking for backup. So they may already have a market access in a way, like they do it themselves, they buy it from an incumbent big data vendor, but they are pushed by internal forces or sometimes regulation. And it depends. Sometimes they want to do it. It's themselves. They want to be sure they can always operate. And we see this coming where they need a external partner to provide a full stack data sets, including the market connectivity, including a different technology to process the data and deliver them to their trading systems. So we've seen a lot of that lately, using partners like Exegy and TNS to build a fully redundant backup solution to another system that the financial partner is using.
There are two sides to this, actually, aren't there, which is fascinating. So what I'm hearing is that you're basically also a partnership with your clients because you're working with them to understand what it is exactly it is they need a solution for, rather than saying, here's a bunch of products, you can buy them all and you can knit them together yourself, or we only sell one thing and therefore, if you've only got a hammer, every problem looks like a nail, on the one hand, but that's still them, if you like, managing it. You're providing them with solutions, but they're managing the knitting them together in the process of the workflows. And then the other side of that, which is almost the opposite of old school outsourcing, is where you're a managed service provider, where you say, we're literally going to do it for you. What you need to do is we'll build what it is you need, and then we'll manage its delivery to you. We'll be monitoring it, we'll be ensuring it's all up and running, we'll be ensuring it maintains its performance standards that you require, that you specify. So it's, people talk about outsourcing and buy and build and buy or build, and that's as old as the hills, as old as I am almost. But actually, I'm beginning to understand more in the modern world. It's a genuine buy and build, a genuine scale efficiency, and a genuine, actually a customized solution. You're working in partnership with your clients. So they might involve your solutions or expanding the things that you have to offer them grow. So it's almost a perfect synergy.
Yeah. And I would say the solution is custom, but the products are not. So every customer is going to be different. They're going to need a specific set of markets. They're going to need a specific set of latency performance. They're going to need a lot of different things. But at the end of the day, I think when we partner with an infrastructure company like TNS, is to make sure we can offer them the tailored solution that is going to rely on very solid managed products on the network side, the monitoring side, and the processing side, or whatever they need. And this is where we do that, I would say, technology partnering with the customers to build that solution.
Yeah, and going back to what Arnaud was saying about the resiliency requirements and all that, we're definitely seeing that trend as well. But it made me think, we spoke earlier about how difficult it is to go look at all these different exchange protocols and market data feeds and figure out how to navigate each one of them. They're all different. There's a regulatory aspect of that as well, right? We are less than 2 months on from DORA going into effect, the Digital Operational Resiliency Act in Europe, which mandated all kinds of new requirements for how you approach resiliency in your trading infrastructure. It's a very similar problem, right? You get these regulations, you have to figure out, how am I going to navigate this? How am I going to be compliant? I mean, it's something certainly we spend a lot of time working with our clients to help them. This is our read on this. This is what we think you need to do. But at the same time, not mandating, this is how we're going to solve it for you. It's all right, let's work together. Tell us how you think this needs to be accomplished. We'll give you our thoughts and we'll work together to find a solution that works. There's also a regulatory aspect driving kind of the change in the needs here and the costs.
There's regulatory on both fronts, isn't there? There's obviously the DORA operational resilience side where they are, all firms are required to demonstrate their robustness in the trading world. And then there's equally the reporting compliance, the actual market transparency, market abuse, ever-changing evolution. Another thing I can bore on for a long time on another day. That never changes, that every regime is different. I mean, they all kind of do the same thing, but they don't do it in exactly the same way. So you've also got this internal challenge in terms of what you're focused on.
Absolutely.
Forever trying to keep up with that, timing of reporting, whether data accuracy, all of the above. And it is relentless, I imagine. I mean, the world that I knew 30 years ago is completely changed. All the long lunches and yours, mine, and it was, everyone was happy. But now everything requires a huge amount of rigor around it, where the data comes from, how clean it is, what it does, where it's got to go to, destinations, how do we get it there, how quickly can we do it? That's a huge resource burden, isn't it, that you're also helping to alleviate?
I will comment on that. This is, I think, a very important point, Tina. I mean, the resources. We've discussed all the things we need to do. I mean, the regulation, the market access, the software maintenance, and this requires a lot of engineering and a lot of talent. And I think the level of talent and skill set that is needed to keep up with all of this, specifically as volumes increase, the speed of the market increase, the latency must decrease. So the way we build your software needs to be better and better always. So that means we need talent, and it's a scarce resource specifically around engineering. And if you think about all these trading firms and brokers that needs to attract talent, this is also a big point, right? I mean, you have to pay them a lot, and also you have to retain them. So this is why working with our partner in this case can also alleviate a lot of things. And then also allow our clients to focus on what makes sense, the business side of things, the secret sauce kind of thing. Because as I said, the infrastructure and the software, even at high performance, low latency, is becoming more and more communitized. We get our product to what we call at Exegy the can't build better state. When we know, okay, this product has reached can't build better. We know that technically speaking, in terms of engineering, you cannot do better. I think that becomes very appealing to the customers because they know they're going to buy something that's actually very mature, fully tested, and that that even if you hire your own technical people in engineering, you're probably not going to get to the same level of quality and performance.
To your point, it's a very costly business at a time where you're already being squeezed in a very competitive market. And, what you need to do is reduce your overhead, if anything, or optimize your actual physical overhead. So again, it's quite appealing, isn't it? If you can actually say, I don't need to do this anymore. And again, your important point is that you are contractually obliged to deliver. I mean, can't do better because of the service level agreements, the onus is on you, the responsibility is on you as the service provider to ensure you meet those criteria, whatever they may be. This has been a really interesting conversation. We could probably have another whole podcast out of this, but we should talk about, in summing up, in terms of what firms listening to this episode take away and when they're considering the challenges they have and how they might do things more efficiently, better, more speedily, more nimbly. What would your top 3 things be, both of you, in terms of what a firm should consider from a service provider like yourself, a managed service provider that can offer them, to your point, a custom solution in partnership that is actually predicated on rigorous, tried and tested products and technologies? What would be the top three things that you'd like them to take away from this conversation?
Yeah, I would say, when you're evaluating a vendor or looking at a solution, right, we talked about kind of the spectrum of needs, the hierarchy of needs. You got to spend some time thinking about where you land on that spectrum. Is it latency at any price? Is it you're more concerned about cost? You're more concerned about flexibility. So step one is you have to understand your own needs. Once you've identified that, I think it's about looking for partners that have a solution for your specific requirements. And your requirements today could be different tomorrow, right? So it's about having kind of that differentiated platform where we have an offering or a solution that caters to everybody, no matter where they fall in that spectrum. I think global reach is something you want to have a keen eye on, right? It's also whatever strategy you have today probably won't be the same a year or 2 years from now. So you want to land somewhere where you can continue to grow your business with that partner geographically while having that focus on the time to market, right? Somebody who can stand you up with access to the exchanges quickly, so you can capitalize on opportunities as they pop up. I think it's about finding a firm that's nimble and agile, right? Somebody who, to your point, if you have a hammer, everything looks like a nail, that's maybe not the partner you want, right? You don't want somebody who's going to impose on you what they think the best solution is. You want somebody who's going to work with you, really understand your needs, and work to craft the best offering, even if it's not, something that's standard for them out of the box.
Yes, definitely. I mean, Jeff, I'm going to almost double down on everything you said. I would say, it's important to be able to assess the technical expertise. As we discussed, all of what we do here is very complex. It seems market data can seem easy. You can say, oh, it's just market data, but it's actually very complex. It's technically extremely complex. And I think there's definitely looking for a partner that understands and has the resources, the technical talent to be able to deliver this at scale. And we've been talking about partnership a lot. And I double down on this. You're not just looking to buy something. You're looking for a technology partner that is going to be crafting the best solution for you based on the product they have. I fully agree with you, Jeff, on the global scale. If you start working with someone, let's say in a region like in the US or in Europe, and you need them to be able to be agile and extend with you and grow with your business. So I think the global reach and the capacity to be global, I think a support team that is 24/7, follow the sun. All of this is very important for managed services in this area of technology.
And slightly cheekily, I'm going to ask you anyway, you've got, where we are today. And as we said at the beginning, there's, a lot of talk around AI and how it's going to change the world and make us software developers redundant, AI agents. In reality, isn't the other key to working with you? You've got globality and boots on the ground and the highest rigorous service standards that you can maintain in terms of performance delivery. Isn't it also the case that you are, by definition, obliged to keep abreast of technological evolution in order to carry on doing what you do, which means, again, that your customer partners also benefit from that? You're providing a future-ready service because you're, by definition, looking at all this technology of evolution all the time and ensuring within Exegy and within TNS that you're keeping abreast of that in terms of how you manage your own business.
Yeah, it's an expertise you need. It's not, you have to stay on top of what are the evolving technologies and trends and have people who can understand them and figure out how to make use of them from an infrastructure perspective, from a software perspective. So it's something that TNS, obviously, we focus on, whether it's, investigating layer one switching or new network technologies. But there's also a knock-on effect that's kind of an indirect effect that, be curious to pick Arnaud's brain on, right? There's also, with the rise of AI, you're seeing deployments that are a lot more power dense, a lot more servers drawing a lot more power. And you're seeing this operating in data centers, either exchange operated data centers or third-party data centers that are running out of space. They're running out of power, right? So space in the data centers is kind of becoming a precious commodity. There are some exchanges and data centers. You went to try to buy space today, you couldn't even do it. They don't have it available, right? And that's, another area where we come in, certainly, is since we have those economies of scale, we can kind of buy in bulk and have a reserve and be able to offer that to you when you need it. But I think there's also an aspect of, from your software perspective, from your server perspective, figuring out how to have, kind of the most power optimized, space optimized deployment possible. right? And there's different technologies in different ways. I think, Arnaud, I'd be curious your thoughts on that. Again, go back to kind of differentiated product lines and how does somebody navigate from a power and space perspective, selecting the right feed handler or ticker plan?
Yeah, I definitely have things to say about that. And yeah, we didn't discuss this, but as you say, like power and space is becoming a scarce resource as well in data centers, which means that in the past, you may have 10, 15 servers doing some processing for market data because you would not count. And it was just easy to add a new server and buy more rack space. But these clients would not invest specifically in building a dense product or saying, okay, I need to do all of this into only 2 Us. I need to be efficient in terms of processing power and density. This is typically the kind of thing we do on the technology side at Exegy, where we can process an enormous amount of data within only 2 Us of appliance and a limited set of powers. For this, we also use FPGAs. FPGAs are accelerators that are much more efficient than CPU in terms of power consumption and also like provide a better outcome in terms of performance. And so by combining all of these technologies, we make a very dense product that allows our customers to spend less with Jeff. Sorry for that. But the idea is that, and I think I wanted to go back to this, Tina, is like we do all of that technology future-proofing for the customers, which means we make sure that we can adopt the newest technologies and embed this into our products and services, because it's also a cost to have people looking at what's coming up, what's new when you run a business. So yes, we always going to have this ability to be for our customers a way to understand what's coming next in terms of technology.
I think that's a really good point and a really good place to end. You're helping them, their roots to understanding what's going on. And again, so they don't actually have to invest significantly in the resources necessary to tell them in an isolated way. You're able to tell them based on both your experience in terms of the solutions you develop, but also in terms of the breadth and depth of your customer base. You know exactly, you've got your finger on that pulse by definition, because you're doing it for a number of customers. Before we conclude, is there anything we've missed in the conversation? Is there anything you'd like to finish with? Some bon mot, Arnaud, that we can leave our audience with?
I think we went through a lot. I like the fact we discussed the colocation scarcity. I mean, this is a very important point for Exegy specifically, because we are coming up soon with a new product that we call a no compromise product that provides the best performance with the best density as well. So it's very much a theme right now. But yeah, I think we discussed a lot and it was a big conversation.
Great. Jeff?
I have nothing to add. I'll just say it's been a lot of fun. It's been a pleasure speaking with both of you and appreciate your time.
And ditto, I really hope we can have this conversation again, and we might be having a whole different conversation if we reconvene in 6 months. Thank you so much, both of you, for your time. It's been a pleasure meeting you both, and it's been a great conversation. So thank you very much, and we'll see you again.
Thank you.
Thank you, Tina.